Big news today from the Federal Reserve, the central bank deciding to raise interest rates by 1/4 percentage point. The decision comes in the aftermath of two regional bank failures, the takeover of international banking giant Credit Suisse by UBS, and a chaotic couple of weeks on Wall Street. ABC's Lindsay Watts is in Washington with more on today's impact of that announcement.
A pivotal announcement by the Federal Reserve. The Fed raising interest rates by 1/4 percentage point. The Fed walking a tightrope. They're trying to balance continuing to aggressively raise interest rates to battle inflation or easing the hike on rates to avoid further plunging the banking system into crisis.
My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal.
Powell also making projections on the economy.
The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy.
The Fed has been rapidly boosting interest rates over the past year in an effort to significantly bring down inflation. But the rate hikes have also inflicted greater economic pain on people looking to borrow money to purchase things like homes and cars. They've also sent credit card interest rates soaring. As an example, if someone makes minimum payments toward the average credit card balance of just over $5,800, they'd end up paying over $8,300 in interest over 20 months.
They meet again in May and then again in June. We could start seeing the Federal Reserve pausing these interest rate hikes in the months to come.
While the Fed didn't hold off on raising rates as some had predicted, the rate hike today was less aggressive than prior rate hikes. It comes after the collapse of Silicon Valley and Signature banks. Some critics say the rapid rise in interest rates contributed to the failure of those banks and created instability and a lack of confidence in the U.S. banking system.
Our banking system is sound and resilient.
Inflation has fallen significantly since its summer peak, but right now it remains more than triple the Fed's target of 2%. Lindsay Watts, ABC News, Washington.
From the latest reports, inflation in February was 6% higher than a year ago, which was lower than January's 6.4% increase from 2022.